Hi everyone, I'm Joel. Home insurance comes with its fair share of terminology: excess, sum insured, premiums, but understanding these terms is key to getting the right cover. And just as important is knowing the common mistakes people make, like underinsuring their home or forgetting to update their policy regularly. So stay tuned to learn what these terms really mean and how to avoid the most costly home insurance mistakes. But before we get started, don't forget to like, share and subscribe, and tell us in the comments what's your biggest question about home insurance.
What is an insurance excess and what will it cost?
The term excess is commonly used when dealing with insurance documents, but what does it mean and what will it cost? When you purchase a home insurance policy, it may come with a variety of excess options. An excess is the amount you contribute towards the cost of your claim if you make a claim for an insured event or incident in the future. Your excess options are dependent on what's offered by the insurer. It's important to know that the excess you choose affects your premium, which is the amount you pay an insurer for insurance cover. Premiums are usually paid monthly or annually. If you choose a higher basic excess on your policy, you can decrease your premium. And if you choose a lower basic excess, it may increase your premium. It's worth thinking carefully about the excess you choose when you purchase a home insurance policy. While it's cost effective to pay lower premiums, you need to consider your capacity to pay a higher excess payment in the future if you need to make a claim.
When does an excess apply?
An excess is the amount you contribute towards the cost of your claim. For home insurance, you may have to pay more than one type of excess, depending on your circumstances.
Which excess amount should I choose?
Depending on your policy and the type of claim you make, different excesses may apply. Consider the amount you want to set for your excess. Choosing a higher excess can save you money in the short term, but you need to be sure you can afford to pay it if you need to make a claim. Setting the excess too high could leave you in a difficult financial situation when an unexpected event occurs. When reviewing the excess options, consider your financial situation, the likelihood of making a claim, and your risk tolerance.
What types of excess are there for home insurance?
It's important to choose the right type of home insurance for you. RACV Home Insurance offers 3 types of excess. Basic excess. This is how much you pay when making a claim, including claims for optional fusion cover and portable items if you've added them to your policy. Your basic excess can be $100, $200, $300, $500, $750, $1,000, $2,000, $3,000, $4,000, or $5,000. If you're aged 50 or older, you can choose a $0 excess. Remember, choosing a higher basic excess can reduce your premium. Accidental damage excess. If you choose to add accidental damage cover and make a claim, you'll pay a $300 excess instead of your basic excess. Special excess. A special excess may apply for one of the listed events. A special excess is payable in addition to your basic excess. Any special excess applicable to your policy will be shown on your current certificate of insurance.
Can I change my home insurance excess?
When you start a home insurance policy, you can select the excess that suits you. Choosing a higher basic excess can reduce your premium, but if you make a claim, you'll pay more out of pocket. Changing your excess may also affect the types of incidents for which you can make a claim. For example, if the damage is not above the basic excess, you'll be unable to claim, increasing your excess. If you have an RACV insurance policy, you can do this at any time during the policy periods, if no claims are pending. Decreasing your excess. If you have an RACV insurance policy, you can only do this when your policy is due for renewal and no claims are pending. Your current certificate insurance shows the amount and types of excesses that apply to your policy.
What does Sum Insured mean?
Understanding the meaning of Sum Insured will help ensure you have the right level of cover for your home and possessions. When choosing and buying home insurance, you will come across the term Sum Insured, which is an estimate of how much it would cost to repair or replace your home and/or contents after an insured event. It's important you have sufficient coverage to protect yourself against financial loss due to unforeseen events such as fire, theft, or storm. Without an adequate sum insured, you might face substantial out-of-pocket expenses in such events. This guide to Sum Insured is designed to help you select the right amount of coverage for your property and contents.
Understanding Sum Insured.
Sum insured is the amount agreed upon by you, the policyholder, and the insurer at the time of purchasing the home insurance policy. While the sum insured is generally the maximum amount an insurance company will pay you for the replacement of your property and/or contents, after an insured event occurs, there are some benefits that may be paid for on top of that amount. It's important to read your policy documents, such as the product disclosure statement, for clarification.
How Sum Insured is calculated.
To calculate the sum insured, you must evaluate the value of your property or assets being insured and include GST. For home insurance, this typically includes the cost to completely rebuild your home, including factors such as the size, materials, and location. For contents insurance, this means the cost to repair or replace things you keep inside your home, including furniture and rugs, fridges, washing machines, and TVs. If you need help to obtain an estimate, you can use the RACV building calculator or contents calculator.
Why knowing your sum insured is important.
It's important to take the time to estimate the sum insured. Underinsuring can leave you financially vulnerable, while overinsuring may result in unnecessarily high premiums. Seeking professional advice or using online calculators can assist in providing a more accurate estimate. When the sum insured is inadequate, you could suffer significant financial loss if your home is destroyed. For example, if a home costs $600,000 to rebuild after fire, but your home insurance policy included a sum insured of $500,000, you could be $100,000 out of pocket if the house has been destroyed. When calculating the sum insured, consider your property's size and any unique features that might affect the cost.
Common misconceptions about home insurance.
There are some common misconceptions about the sum insured. Some people confuse it with the market value of the property, which includes land value. However, it refers to the cost to replace or repair the property. There is also confusion around how to factor in inflation and future costs of housing materials and labour. You should check the product disclosure statement of your home insurance policy to find out if sum insured automatically adjusts for inflation. For example, if you have RACV home and contents insurance, the product disclosure statement states that each year your policy renews, there is an automatic increase in your building's sum insured and general contents sum insured to account for inflationary trends.
Factors to consider.
Several factors need to be considered when determining the appropriate sum insured for your home. Firstly, you must assess the replacement cost of your property, including the main structure and any additional structures like garages or sheds. Consider the materials used, the property's size, and any unique features that might affect the cost. For example, do you have solar power or a solar battery? Another vital factor is the value of your personal belongings. Calculate the cost of replacing all your furniture, appliances, electronics, and other possessions. Don't forget high-value items such as jewelry or artwork.
Avoiding underinsurance.
It's crucial to avoid underinsurance, which occurs when the sum insured is less than the actual replacement value. In such cases, you may receive only a partial payout, leaving you to cover the remaining costs yourself. To prevent this, regularly review and update your sum insured to reflect any changes in your property or the value of your belongings. The value of your belongings may change as you progress through different life stages.
When and why to review your sum insured.
Life changes, and so do the value of our belongings. Failure to review your sum insured could result in being underinsured or overpaying for coverage that you don't need. So when should you review your sum insured? It's a good idea to do so whenever you make significant changes to your property, such as renovations, purchasing new items, or selling off belongings. Additionally, it's recommended to review your sum insured annually to account for inflation and any changes in building and labour costs.
How to adjust your sum insured.
Adjusting your sum insured is a straightforward process. Start by taking an inventory of your assets, including their values. You can use online tools or consult with a professional valuer to determine accurate replacement costs. Once you have this information, you can contact your insurance provider to update your sum insured accordingly.
Impact of changes on your premium.
Keep in mind that adjusting your sum insured can have an impact on your premium. Increasing your sum insured may result in higher premiums, while decreasing it could potentially lead to savings. It's essential to balance the coverage you need with what you can afford. Remember, it's crucial to regularly review and adjust your sum insured to help cover your assets in an insured event. And there you have it, the key insurance terms explained and the biggest mistakes to avoid. Did anything surprise you? Let us know in the comments and tell us what else you'd like to know about this important topic. If you found this video useful, give it a like and share it with your friends and family. We post new RACV videos every day, so hit subscribe and press the notification bell to stay up to date with our latest motoring, home and travel content. Thanks for watching, and remember, the right cover can mean peace of mind.